Welcome to Trading Lounge in the S&P 500 for the 23rd of August, starting with the 4-hour chart here. We had been looking for, down for the A wave here, then an A and a B and a C here for the B wave here. And if that is the top in play here, then we'll be looking at 5 waves to the downside. So the trade is really quite simple. It's just a matter of going short below this low here. Of course, when the market comes down to this low here, we're going to see a bounce come in from that old low here. And so it will bounce around and wiggle around a little bit, so you'll need to give it some space to get on through, but eventually that will become the retested resistance here. Now, of course, we're in an uptrend here, so I've gone back over this particular structure here to see if I can work it in another way, and I can. And in that instance, there's also the possibility that from this low here, that we can have another little 5 waves up to this point here, and then move down. So what we need to do today is we need to work 2 strategies. One is short, which is going below this low here, and we can get a better position than that. We'll zoom in on that. But also too, we need to be mindful that there can be another little 5 waves up before we turn down lower through here. So let's go in and have a look at this on the hourly chart. This one here is quite simple. We can just work that through there. But the count that we'll be looking at today, we'll be looking at this moving up here in that. Let's go and have a look. So from the low here, we can look at, from wave B low here, we can look at this as wave 1 here and wave 2 here. And then looking at this here as 1 and 2 and 3 here and 4 here and 5 here for the 3rd wave here, an A and a B and a C wave for the 4th wave here. And then we would be looking at this here in terms of wave 1 here, pulling back for wave 2 to the 61.8% mark roughly, then wave 3, wave 4 and wave 5 taking us up into what I call group 2 here, 65, 72 and 80 in that space there. So so I think that we just need to have 2 strategies here for this. We need to move in and have a closer look at these here. But this count here is really quite fitting for this, because I'll just go to the 100 tick chart now. So let me just go to the 20 tick chart here for a moment, because okay, great. So this is my working chart here. So from this low here, I've got wave 1, an A and a B and a C for wave 2. That's never really changed from that point. I just want to go over this for the Elliott people that like going through all the details a little bit. So I've got wave 1 and 2 here, and then 1, 2, 3, 4, 5 for the 3rd wave. Still a little bit hard to see, so I've got a bit of time today, so we'll just look at this here. So there's a nice little 5-wave structure here for 1 and 2. We've been over this before. Then 1 and 2 and 3 and 4 and 5 here for the 3rd wave, the 4th wave here, and then the 5th wave up here. So we've got an extension in the 5th wave here with 1 and 2 here and 3 and 4 here, and then up for 5 here with 1 and 2 and 3 and 4 and 5 here, and ABC back for wave 2. So wave 1 and wave 2 sit here quite comfortably, and then it's a matter of looking at this as 1 and 2 and 3 and 4 and 5 here, then the A wave, the B wave and the C wave for wave 2 here, and moving up into 1 and 2 here. So here we've got 1 and 2, 3 and 4. I've got the extra one there, haven't I? What have I done here? 1, 2, 3, 1, 2. Oh no, that's right. And that gives us the top of wave 3 at this particular point with the last impulse wave here, and then an A and a B and nice 5 waves down for wave C for wave 4, and then that puts us with wave 5 at this particular junction here as wave 3. So it can be counted quite nicely like that. And then we've got the A wave here, a B wave here, and a C wave coming down here for this here. So this little move here can, in fact, I can count this up here as corrective as well, to be quite frank about that. But I just want to, I just don't want to miss anything. It's, you know, there's a difference from being an analyst, and there's a difference from being a trader. And the analyst, you put your hat on, and that helps with the direction and target points. And as a trader, we don't really care which way it goes. We just need to be on the right side at the right time. So the trader is just really looking for setups, but likes to look at the analysis to find out, well, what's the possibilities for this, you know, because that helps with building into positions and the money management side of it all. So just coming back to all of that and trying to weave it all in together, you know, let's just say, you know, the what if. So, you know, what if this is wave 3 here and wave 4 here, and then we've got wave 1 here and wave 2 pulling back into the box, a 50-60% retracement level, and then that would leave us with wave 3 moving up higher here and wave 4 here, and of course wave 5 that would take us up into group 2 here. And of course, if it's going to go up to group 2, it will try to move up higher here. Also too with this as well is that the bullish weekly cycle that I've sort of created, and normally we would see Friday and Monday being the bullish day. Well, if Friday is bullish, well then Monday is going to follow through on that, and then we see the profit taking on the Tuesday, and then Wednesday and Thursday are normally the swing days in the market, the ones that take out your stops. So if Friday's not the bullish day, then I know I've got a change in trend. So if we see the US being bullish today, that's Asian time at the moment, nearly 8 o'clock in Asian time. But if we see the S&P bullish, then on the Friday, then we'll know that the Monday is going to be the case. But if Friday is bearish, then we know that the trend has changed. So that's really quite simple, but very useful to use. So in a nutshell, what we're going to be doing today is that we're going to be going long above this high here, if that comes into play. Okay, so that's our little game here. This is sitting also on top of group 1, so if you know your trading levels, then number 3 is always group 1, so support on that would be a catalyst for further upside at that point. Now, on the downside here, as I mentioned before, we've got this previous low here. All we need to do here is go low. I can't draw past the price point here for this, but this is where, in the biggest picture, this is where we go short, this is where we go long here. Of course, we would be able to get a better short position in all of this. This box here is the 61.8%, but you'd have to allow the market to come down to that point at this stage to play out with this. So I think there's one more little drop to go in here after we get the bounce off the 20 here. But so the thing here is that if this move from here down to here becomes, I have to draw over this side, so if it comes down through to here, if it's going to be bearish, it's still going to have an ABC pattern back up 50 or 60%, you know, so that's what you would have to do here once that low's come into place here, wherever that low may come into place, then we need to look at this space here. So that brings us into the 29-26 area. So what also that does as well is that if this level here becomes the support, then you could also trade long from that point, but it must become, you know, a nice tested solid support on that space, and you'll need to adjust that depending on where the low is for that. So it might end up on 29-25, which would be a nicer space to be in, because the levels also work through from 2 to 3 here. So the Fibonacci numbers are 1, 2, and 3, 5, and 8. When we're working with 8, we'll also have group 2 in here as well. So yeah, sitting on top of that, we can go long from that point. But it's got to be sitting on there as support, because otherwise this will create 5 waves down to this point and then have 3 waves back up and then drop down from that point there. If there is 3 waves, if this comes down here in 5 waves and has 3 waves back up here, then you can use the 29-20 to become the retested resistance and look to build in a short position from that point. The other side to this too, if this low here is breached, obviously we're going to get a bounce off this low or the 2900 here, but you could also look to go short once this becomes the retested resistance here as well, the 2910 here, or even the 2915. You could move into that position there as well for that being up here. I won't put it there. So the 15 would need to become the retested resistance because it's at the 61.8%. So if that becomes the retested resistance, so you can get a small position there, a small position there, and then just wait for the 2900 to become the retested resistance. So you and then also group 2 down here as well. So you can start building in from that point there, but you know, that 61.8% has to become the resistance at that point before you can start looking in on the short side and looking back at the long side. This, wherever that 61.8% is up here, that needs to become the support in the market, and you can get a small position there and then build on top of the 30. You'd also want to continue to build it because our target would be up at group 2 here. So 29.30, you want to build in a couple of trades within this particular space here. Alrighty, I'll leave it at that. I just wanted to have 2 strategies and not get caught out, you know, and being left out of the game. Enjoy the weekend. Thanks for the support.